Most people are going to overlook it, not because the chance wasn't there, not because the signals were hidden, but because our minds are wired to dismiss what seems out of reach. Right now, something that feels impossible is quietly taking shape. A massive silver surge is on its way, and it won't favor the noisiest voices. It'll favor the ones who stay composed. Years back, a regular young guy started studying markets late into the night while the rest of the world was asleep. He had no powerful contacts and no secret information, just a deep curiosity and the willingness to wait. That young man grew up to become Warren Buffett, one of the most respected investors the world has ever seen. He once put it simply, the stock market is a machine that moves money from those who can't wait to those who can. And right now, waiting is exactly what this moment calls for. The biggest financial windows rarely open with fireworks. They open with silence. They come wrapped in doubt, dressed in boredom, looking like nothing special at all. Silver is exactly that kind of quiet window. It's not flashy like the overhyped trades, and it's not glamorous like fast money schemes. It's just steady, overlooked, and undervalued. And that's precisely what makes it worth paying attention to. Most people believe success shows up as a sudden explosion. One perfect trade, one massive paycheck, one golden decision. But real wealth builds the way mountains do. Slowly, layer pressing upon layer, shaped by pressure and time. Picture a seed buried in the earth. For weeks, there's nothing to see. No growth, no movement, no evidence, anything is happening. Then one morning, a tiny green shoot pushes through the dirt. To everyone watching, it looks instant, but underground the work had been going on the whole time. Financial success follows that same invisible rhythm. Right now, a lot of people are sitting on the sidelines, waiting for certainty before they make a move. They want guarantees, they want flawless timing, they want proof the surge has already started. But by the time the crowd feels comfortable enough to act, the window is usually already closed. The sharpest investors operate on a different understanding. You don't get paid for chasing certainty. You get paid for spotting value before it becomes obvious to everyone else. That takes discipline, emotional steadiness, and the ability to stay grounded while others around you are freezing up or panicking. This is where something deeper begins, because investing isn't really just about money, it's about who you're becoming. Every choice you make is shaping your character. When you pick patience over impulse, you grow stronger. When you pick learning over guessing, you grow sharper. When you pick long-term vision over short-term thrills, you become someone who can't be stopped. History has shown us again and again that the people who win financially aren't always the most brilliant. They're the most consistent. Look at Ray Dalio, who built one of the biggest investment firms on the planet. He often talks about how success comes from understanding cycles, the rises and falls that drive markets and economies. Cycles reward the people who prepare, and preparation starts with the simplest of actions. Small steps taken again and again create results that seem extraordinary. Begin with education. Set aside time every week to study how money actually works, not randomly, not emotionally, but with a system. Learn why assets climb, learn why they drop, learn how value takes shape. Knowledge is what dissolves fear, and once fear is gone, everything becomes clearer. The next step is discipline. Make your investment decisions ahead of time, not when your emotions are running high, not when prices are swinging wildly, but when your thinking is calm and collected. Write those decisions down because a clear plan is a shield against impulsive choices. The biggest threat to any investor isn't the market itself, it's emotion. Fear whispers that you should wait forever. Greed screams at you to jump in blindly. Wisdom simply says, move carefully and keep showing up. Think about Elon Musk for a moment. Before his companies reshaped entire industries, he went through failure after failure. Rockets blew up, projects fell apart, and critics lined up to say he was finished. But he grasped something that most people miss. Progress demands discomfort. Growth demands uncertainty, and success demands that you just keep going. Building wealth financially works the same way. You can't grow your fortune without stepping into the unknown. You can't reach freedom without accepting calculated risk. You can't arrive at a different future if you keep repeating the same old habits. The people who truly transform their financial lives aren't just lucky. They're deliberate. They watch their spending, they build savings, they invest on a regular schedule, and they always think long term. They recognize that every small decision carries weight. Every dollar set aside is a seed, every investment is a step forward, every lesson absorbed is an edge over yesterday. Over time, all those small edges start compounding, and compounding is one of the most powerful forces that exists. A tiny improvement repeated with consistency turns into massive progress. 1% better decisions, 1% better habits, 1% sharper discipline. Year after year, those shifts completely reshape a life. Most people dramatically underestimate what they can accomplish in 10 years because 10 years feels like an eternity. But one day, you'll open your eyes and realize that entire decade has already gone by. The real question isn't whether time will pass. It always does. The real question is who you'll have become while it was passing. Will you be someone who just waited or someone who prepared? Opportunities don't change lives on their own. Decisions do. The coming silver surge or any major financial shift isn't only about price. It's about how you see the world. It's about spotting possibility where others only see confusion. It's about moving when others stand frozen. It's about trusting in long-term growth while short-term noise is drowning everything out. And the most meaningful change you can make starts right now. Start small. You don't need everything to be perfect. You don't need a fortune to begin. You don't need ideal timing. You just need to keep showing up. Consistency will always outperform intensity. Quiet, steady steps will always beat occasional bursts of effort. Make investing a habit. Make learning a habit. Make patience a habit. Those habits will carry you further than raw talent ever could. Because talent without discipline eventually fades, but discipline without fail produces results. Years from now, you'll look back at this stretch of time and see it as a turning point. A moment when uncertainty was everywhere, but so was possibility. And you chose possibility. You chose growth. You chose preparation. You chose to keep moving while everyone else stood still. That single decision is what separates an ordinary life from an extraordinary one. The silver surge isn't just about a medal. It's about a mindset. It's about vision, and it's about having the courage to believe your future can be far bigger than your past. Stay calm. Stay locked in. Stay patient. The greatest opportunities tend to show up without making a sound, and the ones who spot them early are the ones who end up changing everything. Most people assume that opportunity reveals itself clearly before it becomes valuable, but the truth is actually the opposite. The greatest chances always show up wrapped in uncertainty. That uncertainty is exactly what keeps the majority on the sidelines. People who build wealth early understand that waiting for everyone to agree usually means you've already missed it. They train their eyes to catch what others walk past, to pick up on quiet signals instead of loud hype, and to lean on their own preparation instead of public consensus. While the crowd is looking for reassurance and confirmation, disciplined investors are scanning for gaps between what people believe and what's actually happening. They know that real value often hides behind layers of doubt, and that hesitation from others creates openings for anyone willing to think for themselves. When Warren Buffett started investing seriously, he didn't run toward whatever everyone else found exciting. He went looking for misunderstood value, situations where patience could turn confusion into an advantage. His method wasn't built on luck or pure brilliance. It was built on the willingness to act before the world caught on. Getting in early allowed small choices to snowball into extraordinary results over time. The takeaway isn't about mimicking any single investor. It's about grasping the principle that wealth often starts with quiet belief. Recognizing opportunity early takes real observation and reflection. It means asking questions most people never think to ask, focusing not on what's popular, but on what's genuinely useful and scarce over the long haul. Early builders also know that timing isn't about predicting the exact moment. It's about recognizing when conditions are tilting in your favor. They study patterns, stack knowledge gradually, and stay tuned into shifts that everyone else ignores. Rather than reacting emotionally to every headline, they step back and ask whether the real underlying value is actually getting stronger. This habit builds a kind of confidence that doesn't waver because every decision is rooted in understanding rather than impulse. That ability to stay calm while everyone around you is second-guessing becomes a serious advantage. It lets you keep taking action while hesitation has the rest of the room frozen in place. Spotting opportunity ahead of the crowd also demands personal growth. It calls for patience when there's nothing visible to show for it, and discipline when progress feels painfully slow. A lot of people walk away from promising paths because they expect instant proof, but real change almost never shows up overnight. The early phases often feel quiet and uneventful, yet underneath the surface, a foundation is forming. The ones who keep preparing during those silent stretches develop the strength to act decisively the moment opportunity becomes visible. Small, regular learning sessions, careful watching, and thoughtful choices gradually sharpen your eye until patterns jump out more easily and confidence starts replacing doubt. Patience and discipline are the quiet engines behind every financial success that actually lasts. Most people step into the investing world full of energy, expecting rapid movement and fast payoffs, but reality unfolds at a much slower pace. Genuine progress rarely arrives in dramatic waves. It forms bit by bit through steady choices repeated across long stretches of time. Calm investors realize that waiting isn't wasted time when it's guided by a clear purpose. They let their investments and their understanding mature naturally, pushing back against the constant itch to react to every short-term swing. That calm creates stability, because every decision flows from clear thinking instead of passing emotion. Many people don't struggle because opportunities aren't available. They struggle because emotions keep hijacking their plans. Fear yanks them back at the worst possible moments, and excitement pushes them forward before they're ready. Discipline is the wall between impulse and action. It turns investing from a string of guesses into a reliable process. Investors who build discipline decide ahead of time how much to save, how frequently to invest, and how long to stay the course. That removes the guesswork from everyday choices and replaces it with a steady direction. Over time, consistency proves far more powerful than intensity because repeated actions pile up into real, meaningful progress. The patient investor understands that growth is almost never visible from one day to the next. Just as a tree strengthens its roots long before it stretches out its branches, financial strength develops out of sight well before the results show up on the surface. During those quiet periods, discipline keeps everything moving. Small investments keep flowing, learning keeps happening, planning keeps evolving. Each of those actions might seem tiny on its own, but together they build a momentum that becomes very hard to stop. The willingness to keep going during the uneventful stretches is what separates long-term builders from short-term chasers. Think about Charlie Munger's approach. He spent his whole life championing rational thinking and calm decision-making. He believed that steering clear of unnecessary mistakes often mattered more than constantly hunting for the next big win. That philosophy captures the real meaning of discipline. It's not about limiting yourself, it's about seeing clearly. By cutting out impulsive moves, disciplined investors protect what they've built and preserve their forward progress. They accept that not every moment demands action, and that sometimes the strongest play is simply to hold your ground. Patience lets time do its work, while discipline makes sure that fleeting emotions never derail the bigger picture. Financial freedom almost never starts with one dramatic moment. It starts with small actions that barely seem to matter at first. Many people imagine that wealth requires a big starting sum or flawless timing, but lasting success usually grows from consistent effort applied patiently over years. A single smart choice might not transform your life overnight, yet a long chain of smart choices slowly rebuilds your entire future. Setting aside even a small slice of income, picking up one new idea each week and making thoughtful investments, these build a quiet but powerful path forward. They look ordinary in isolation, but stacked together, they form a structure strong enough to support real independence. Consistency is what turns limited resources into expanding possibilities. When small amounts are put to work regularly, they start building their own momentum. Growth begins softly, almost invisibly, and then gradually picks up speed the longer the process continues. Too many people quit early because they expected a rapid transformation, not understanding that the early stages exist to build a stable base. The habit of regular action ends up being worth more than the size of any single contribution. Even modest efforts produce meaningful outcomes when they're sustained long enough. Every disciplined step strengthens your belief that real progress is happening, even when you can't quite see it yet. Small, consistent actions also reshape your identity. Every time you follow through on a financial plan, you reinforce the idea that you're someone who takes ownership of the future. That shift in identity becomes its own fuel. Your decisions naturally start lining up with your long-term goals. Instead of forcing yourself to act wisely, wise action just becomes part of how you operate. The whole process gets smoother and more dependable. As habits take the place of hesitation, and over time, the stress fades because your choices are guided by established patterns instead of sudden feelings. John C. Bogle lived out this philosophy. He championed simple, consistent investing as a road to financial independence. His whole approach was about regular contributions and long-term commitment instead of constant tinkering. It shows how ordinary actions done regularly can lead to extraordinary results. Financial freedom is usually built through persistence rather than genius, assembled step by step through decisions that feel small in the moment but quietly stack into lasting strength. Uncertainty is where growth is born, yet it's also the place most people spend their whole lives trying to escape. The mind craves safety and certainty. It wants guarantees before it's willing to move. But progress almost never comes with a promise attached. Every worthwhile step toward a better financial life requires walking forward without knowing exactly how things will play out. The ones who insist on waiting for perfect conditions usually end up standing in the same spot, because perfection almost never arrives. Learning to act through uncertainty doesn't mean being reckless. It means building the courage to make thoughtful choices even when the ending isn't guaranteed. Fear has a clever disguise. It dresses up as caution and tells you that you need more time, more data, or better circumstances before you begin. Preparation matters? Absolutely. But endless preparation can quietly become a way of hiding from action. Real growth lives in the balance between learning and doing. The people who move steadily forward know that knowledge only becomes valuable once it's put to use. Each small action builds experience, and experience gradually replaces hesitation with a calm confidence. Rather than trying to wipe out uncertainty altogether, they learn to navigate it using thoughtful judgment and steady planning as their compass. There's a world of difference between a calculated risk and a blind one. Calculated risk means understanding what could happen, preparing for the bumps, and still choosing to move. That approach turns uncertainty into opportunity, because action opens doors that standing still never will. Even when results aren't perfect, the lessons you pick up along the way sharpen every decision that follows. Over time, the ability to steer through uncertain moments becomes one of the most valuable financial skills you can own. Confidence doesn't come from always being right. It comes from knowing that mistakes can be handled and turned into lessons. Sarah Blakely's story captures this perfectly. She started with almost nothing and zero assurance that things would work out, yet she kept moving forward one step at a time, refining her ideas through action instead of waiting for the stars to align. Her progress came from the simple willingness to try, adjust, and continue, even when the outcome was unknown. It shows that uncertainty doesn't have to be a wall. It can be a training ground where resilience is forged and determination is sharpened, carrying you steadily through situations that once felt overwhelming. Most people look at money through a short window, chasing quick gains and instant rewards because fast results feel exciting and reassuring. But that approach usually creates a cycle of constant reaction, where every decision is driven by urgency instead of direction, and real progress never actually takes hold. A long-term wealth vision replaces that urgency with purpose. It paints a clear picture of where you want to be years down the road, so that today's decisions naturally line up with tomorrow's goals. Once someone develops that kind of vision, individual setbacks lose their sting because they're just temporary steps inside a much larger journey. A long-term lens changes how you evaluate everything. Instead of asking how fast something will pay off, you start asking whether it will still matter years from now. That shift encourages deeper thinking and cuts down on the temptation to chase every new trend that pops up. Time becomes a partner instead of an opponent. Growth that looks painfully slow at first often becomes incredibly powerful when it's given enough room to develop. The longer your horizon, the more space there is for improvement, for course corrections, and for bouncing back from mistakes. Building a long-term vision also means getting clear about what you actually value. Money starts to mean something when it serves a purpose beyond just spending. Some people want stability for their families, others want independence, and others want to create possibilities for generations after them. A clear purpose strengthens your commitment because every decision is tied to something deeper than a passing want. That sense of direction keeps discipline alive during seasons when progress feels invisible. Without a vision, motivation dries up fast, but with one, even the smallest step feels like it's connected to something that truly matters. Jeff Bezos built his entire philosophy around this idea. He made decisions designed to create value over many years, rather than chasing quick returns. That approach shows how patience combined with foresight can produce something extraordinary. Long-term thinking encourages steady building instead of constant chasing, guiding you toward choices that strengthen your future while filtering out the distractions that promise fast results but almost never deliver anything that lasts.